So you often hear price action is key, and in today's video I'm going to show you a little bit of what I would like to call a high or low breakout. Now this is like the simplest concept in price action, but this is why price action has so much power. A lot of times we see stuff like this in forex where you're going along and you see something where you can look left and you can see, well, hey, you know what? Historically, we can all see this. Price came up to this area, found sellers, and pushed back to the downside. Now, the reason I want to point out this area is the most interesting place on this chart, in my opinion, and here's why. At this point, the market made a very distinct movement. You can see price was moving up and buyers were in control. But as soon as we came up into this area, we actually saw the inverse happen. Sellers came in, and on this red candle and in this red candle, we basically saw a breakout to the other direction that lasted for several hours. This is a 1 hour chart. We're looking at Aussie yen, and price action wise, this little move was kind of bearish. But then we started to see in the next major session, we started to see a big move back the other direction. In fact, erasing this kind of downward structure, we broke out to the upside. And this brings me to the most important and most interesting part on the chart, this level right here. Why is this the most important level? Well, everybody who is watching this price is saying, hey, we're getting back to that high. What's the market going to do? There's a big question mark right here. And this is my favorite sort of concept to look at when trading Forex, is looking at major spots on the chart like this and identifying what I would like to call a levee break. It's like if there's a dam, right, for a pond or for a lake or something, and that dam just breaks. What's going to happen? The flood is going to come out, right? So, oftentimes the way they make a lake or a river, right? They have like a dam that blocks it, and it keeps the river blocked up so that there's able to be a lake or an ocean, or not an ocean, or a pond, right? You guys get the point. The point here is with Forex is that this sort of concept happens. We get a big block point where, okay, market doesn't want to go any higher, but then we're reaching it again. We're coming back up to that point of interest. And what happens? Well, in my opinion, the best thing to do is to just watch. Sit on your hands, sit on the sidelines, and watch what happens, because we don't have the answer to this yet. We know this is a point of interest for a lot of traders, but we're waiting for the move. And here's how I generally like to play something like this. Okay, price didn't make its way up, so not too much interest here. But then look at this. This candle is really telling. What this tells us, this is a 1 hour chart. This candle has just closed. Notably, it closed above the previous close. That right there is potential or early warning sign that we are breaking out. We're making our move higher, and that is a bullish signal. Now, I like to look for a breakout and some sort of pullback, which we'll talk about in a moment. But this by itself is already a point of interest. The price action movement here has broken above the previous high. Things look good, and it looks like we have potential to continue higher from here. Hey guys, I'm just cutting into the video here to let you guys know that if you would like a free copy of our technical analysis handbook, this is a PDF guide that we put together. It took us a couple weeks as a team to create, but basically what it does is it allows traders to go through a whole bunch of trading strategies, setups, strategy examples, much more that I can go into a lot of detail in a PDF form. If you'd like a copy of that, it's 100% free. All you have to do is shoot a message to us on Telegram, send the word handbook, and we'll just drop you a copy sometime soon. One of our team members will do so in the description down below. Again, click that Telegram link and chat with us there. So let's go ahead and talk about what happens next. Price continues up a bit more. We close higher. And now you're saying, okay, this is definitely closed. Everybody who's watching this is saying, look, the market has broken outside of this range, and that looks really bullish for more continuation. So how would we enter into a market like this? For me, if we clear this, if we close outside by a good margin, and there's a bit of subjectivity here, you can define it how you'd like, but for me, it's kind of eyeballing it. I just want to see price make a move and close outside by a good margin. And I would say that this has closed outside by a good margin. So now what we're going to do here is we're going to go ahead and mark this spot on the chart. If price pulls back to this, and we're assuming We're assuming that we're really bullish on the pair from a fundamental perspective or other reasons, but let's just assume just purely price action wise. If we're just trading this thing price action wise, we have a couple spots in the chart. This area, which was resistance, could now be viewed as potential buy, right? So if this thing comes back down to this level, we are going to be looking for buy zones. Or buys, right? This zone is what we're going to call a buy zone. And the reason for that is the market has made it very clear that this thing has a very strong likelihood of wanting to go higher. We didn't wick above and come back down. We closed outside. And this candle, again, this is the candle right here to pay attention to. Now, we can skip ahead a little bit. And now we start seeing the pullback. Here's the pullback. For me, and this is how I like to approach this. You may have a different style of approaching this. I like to just buy on a retest. Sometimes people will look for lower time frame confirmation. They'll look for candlestick patterns on the 15-minute chart, on the 5-minute chart. However you like to enter, that's cool for you. But for me, I'm just willing to buy this on a pullback. So my entry could potentially be right there, and I'm looking for a pullback to this structure. Now, in terms of a stop loss, here's where things get a bit interesting. Depending on what kind of trader you are, you may have a tighter or loose stop loss. But for me, I'm a swing trader. So being completely honest, I would probably be looking at this and I'd say, hey, you know what? What's the max pain I'm willing to take on this trade? For me, I would probably put this stop below structure here. Okay, so this is a risk of 39 pips, which I know is, maybe for day traders, that's a bit too much. But for me as a swing trader, that's comfortable to me. Now, in terms of a target, we could potentially scroll out. We could look left, see if there's anything. Well, we don't really have anything. So with that in mind, what do? Well, for blank statements, we'll just go for a simple concept. We'll just go something like 2-to-1. So let's say we're going 2-to-1 on this trade. And the idea here is we have now broken outside of the previous range, right? The price said, hey, we've locked out over here, but then we were able to close outside here. Bam, we're looking for buys and we get the buy entry. There's the buy entry right here in this area on a retest. And let's say we're in this market. Now, of course, I have cherry picked this, so I know that this thing already works out. Please, when you watch YouTube, know that when people talk about this stuff, they are talking most of the time, they know what's already happened. And the reason I say that is because, YouTube is a sketchy place. A lot of times you see people who act like they know everything about forex and everything about stocks and trading. In hindsight, I don't know everything. I'll be the first one to say there's always more to learn when it comes to this stuff, but I am cherry picking to show an example. Now, this is not going to work out like this every single time, but the idea here is the same. We have got a very clear example of a break of structure, a pullback to that structure, and now we're looking for more follow through. And again, part of we've talked a lot about entries here, looking for a good spot to get in. When it comes to looking for a target, we're looking for at least, in my opinion, 2-to-1, right? If I'm going to put $100 down, I want to make at least $200 out of the move. And that's a lot to ask from the market. 2-to-1, you may say, oh, that doesn't sound that much. Well, 2-to-1 is a lot to ask. You're asking for the market to move 2 times in your favor without going 1 times in your favor. I hope that makes sense. But you've got to understand that even 2-to-1, if you're able to catch good entries again and again, is going to do you right in the long term if you're able to catch good spots and do your technicals. So ultimately, the market rallies and ultimately tags us out for that 2-to-1. Now, the idea behind this concept is we've done something really, really simple. We've highlighted a key decision point. Remember when I was drawing that question mark? That's kind of what I want you to think about. When you're looking at your charts, you may come in and this stuff changes every day, right? Let's actually go to modern time right now and we'll just see if we can pull an example. I actually don't know exactly what the dollar yen is doing right now, but let's go find out. So let's go back to the current event, and this one in this example is a seller's market. Okay, there's other ways you can do this, but let's just say we're doing a simple, moving average check. We got the moving averages lined up. You got the 100, you got the 50, and you got the 20. I know not everybody loves moving averages, but just for the sake of finding a simple trend. There's the simple trend to the downside. And what can we do? Well, we know this market is making a move lower, and the specific strategy that I'm talking about, the entry that I was clarifying there, was the idea of looking for the major question mark spot on the chart. And I'll let you pause the video if you'd like to, but where do you think the major question mark on this chart is? Is it up here? Is it down here? Is it here? Well, the major question mark spot, I'm giving it a creative name here as we go, to me is right down here. okay? And this spot is big because, and again, this is a current example. We're looking at Aussie yen right now. The reason that this matters is that if you're short bias in Aussie yen, and there's a lot of people who are, if you're short bias on this thing, this is the question mark. If price were to come down here, and again, we don't anticipate, we're not assuming that price will come down here. Let's just say, for example, that we are watching this thing, we're sellers in this market. The biggest question point mark zone for breakout moves, for the big stuff that happens in currencies, is can we get a break underneath this low? And if that were to happen, if we were to say, let's say we get a candle down, and then we get another candle outside, then we are now paying attention to this stuff again. What we just talked about can be traded in the opposite direction, the sell side. So if we were to get a close outside of this key question mark spot, then that would be of interest to us, right? Again, going off of this concept, we are looking for the most impactful moves in the market. So, we could look, and again, same concept. We'd be looking for a rally in that case, looking for a pullback to that structure. And these sort of trades, in my book, are the easiest type of trades. This is the stuff I look for again and again. It's a break and retest, but we're explaining it in a little bit more granular detail here. I mean, we can see this happening again and again. So here's, for example, major key spot on the chart, right? Big spot here. We broke outside of this. Here's the candle that we're talking about. That's the big question mark candle. We get the breakout outside. We retest that area, and then we go lower, right? And the thing is, like I said, this is not going to work out 100% of the time. Let's point out an example where it does not work out. I think it's important to do that. Let's say that you're looking at, would this be a good spot? Yeah, let's say this. This is just an example. Let's say that you're looking for a downward move, and this thing has kind of put in a lower high, and you're saying, oh, candle has closed outside. Now you may have caught a 2-to-1 in this move, but it's kind of doubtful, because let's say that you sold here, you put your stop loss here. That is not even a 1-to-1. So in this case, right? Let's say you took an aggressive sell there and things came back up. Of course, that would be a losing example. Just know that any sort of price action stuff, I love price action, and I'll be the first one to say I use it all the time. I love studying candlestick patterns. I love using price to my advantage in my trading, but I know that it has its flaws, right? Just like if you've been in a relationship with anybody, you may love that person to death, but you know that they have flaws just like you and me. Well, price action kind of has its own flaws too. It's not perfect. It doesn't tell you the exact thing of what's going to happen in the market all the time. It just tells you a clue, right? So that's what we're kind of looking for. So again, just to recap, we are looking for the major spots on the chart where continuation could potentially happen. We're looking for confirmation in the form of a candle closing outside. And then we're looking for retests to potentially sell or buy if it's in an uptrend to continue the move. It's basically the idea here behind a break and retest, but we're just clarifying how to find the spots in reverse. Now, let's do something interesting here. Let's say that you're looking at Aussie yen and you're saying, well, I'm actually bullish on this pair. Where's the most interesting point? Well, this is a bit debatable, but for me, and again, the thing is, it's not perfect. It's what comes to everybody's mind first. What's the most interesting point on this chart for a breakout to the upside? For me, that would be right here. And that's a bit of a ways away, but let's say that we start to see this thing rally, and let's say it has a couple good days, and you're looking at this right in this area. Let's say that you're looking for either direction. Some people are pretty price agnostic with their trading, meaning they'll just mark zones like this, and they'll say, hey, if price goes underneath this, I'll look to sell on a retest. If price goes above a major spot, I'll look to buy on a retest, meaning that they are price agnostic. And, this is to each their own. This is personally, I combine fundamental analysis with my trading. So usually I have a direction. I pick one way that I'm fundamentally bullish or bearish on. If you're not familiar with what I mean by fundamentals, then what we'll do here is you can actually click a link that's popping up in the top right hand of the screen here. This is an introduction to fundamental analysis. If you'd like to check out that video, that might be helpful to you. But for me, again, I choose a general direction. So anyways, regardless of what you do, you may be price agnostic. You may be looking for either direction moves, and setting those scenarios up can be very, very powerful. So in fact, what I'll do here at the end of this video is I've got another video coming on this very subject. So stay tuned for that video and click it as it pops up here on the screen. Thanks for watching. We'll see you next time. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.